Hi, this is Aptamer with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 26th of July. Starting off with the FTSE 100, where it's getting a little bit stuck at the old June resistance around or just below the 7,700 level. We've got support there from the rising 200-day moving average around 75.75, and hoping that with that recent cross of the 50-day moving average below the rising 200-day line, that's actually going to be a bullish signal. We can get through 7,700 on an end-of-day close basis, then hopefully looking for 7,760 at that February resistance line, but only above 7,760 would really open up the prospect of a proper move to the upside, maybe chasing other markets up towards 8,200 on a 4 to 6 week view if we get through that 77.60 zone. Below the 200-day line, worst case scenario at the moment around 74.50 or 60, which was that breakout line from June. On to the DAX, and here we can see that we've got the market still in consolidation above a rising 50-day line. Normally a sideways shuffle at and above the 50-day line is a prelude to a decent move to the upside for a stock or market. So we're hoping that we'll eventually break through 16,300 and head up towards the top of that rising trend channel from last August at 17,200 as soon as the end of next month. RSI at 54, 55, which is still in a decent place in terms of continuation to the upside. Worst case at the moment, the floor of the channel, 15,600 if we fall back below the 50-day line. Moving on to the Dow, which has delivered 12 days in a row, apparently, of rises, which is quite an achievement. Here we've got a situation where still looking for a push towards the top of its August rising trend channel, 37,300 at the moment by the end of next month. And that's valid at least while we hold above that broken March resistance line around 35,200. Maybe you have wiggle room down to 35,000 there. But the Dow still in a good place, probably cooling off as it gets overbought, as it has been for the last few days, not surprisingly, given 12 days in a row. On to Bitcoin, which has been rather flabby of late, but the scenario was that we would break out of that recent consolidation, hit the 50-day line, and then push higher, just to sort of drag out the weak hand. So far, we've just hit the 50-day line and not really done very much. RSI at 42, so there's still a risk of pushing down towards the 200-day moving average, 26,000, or maybe as a better scenario, just retesting old May resistance around 28,000 as new support. If you're looking for a momentum trigger, then the obvious one would be an end-of-day close back above 30,000 on Bitcoin. Moving on to the stocks, and a weird and wonderful collection today, all sorts of bagging situations. First one is actual experience, which I covered yesterday on the basis of the unfull gap to the upside off the bear trap gap reversal, so unfull gap to the upside off the lows. And the market closed then above the initial July support at 0.52. And the view at that time is that above the 0.5 pence zone, we could get up to 0.8. Obviously, then we managed to get up to the second target, 1.1 pence. And we have one final target, which is up to 1.9 pence, which is basically a resistance line projection from the beginning of the year. So 1.9 is the best case scenario, while we remain above the 200-day moving average and late March resistance at 1.2. So I think that's a pretty specific map there for the shares. On to stock which I haven't covered quite a while, and it's called Aptamer Group. Here, potential turnaround, good bullish divergence, in fact, very good bullish divergence there. We actually gapped down, and we've had now potentially a gap close buy signal, so closing above the top of the July gap at 6.7 pence, above 6.7, looking for as high as 24 pence over the next couple of months. If you're looking for a more down-to-earth target, maybe up to 15 or 16 pence, which was the pullback area back in June. But end-of-day close above that 6.9 should set Aptamer on its way, especially with all that bullish divergence. Anemoi is next, and here we can see that the shares have managed to deliver a bear trap from below the January support there around 0.85. Above that, we're looking for as high as 1.5 at the top of the November broadening triangle. Ideally, we close today above the, well, at least above 0.8, which is the top of that falling wedge from the early part of the year. But 1.5 on offer perhaps as soon as the end of next month, while we're above 0.8. Moving on to Catanae, which has burst into life after rather an extended leave of absence. Here we've been in a descending price channel, as you might expect, since October. Initial target here up to 0.2. Top of the triangle from October up to 0.28 as a best case scenario. And I think we really want to stay above 0.12 there, which is the 50-day moving average level if you're into that kind of situation. Another blast from the past is Amala Foods, which has also burst into life as if it was 2020, I think was the last time it was moving along. Here we've managed to break above the 50-day moving average at 0.09 and above the June resistance at 0.12, above 0.12, looking for the shares to hit resistance on the way down at 0.25 by the end of next month. So quite an interesting situation there. If you look closely, you can see that we have had a modicum of bullish divergence, so much lower lows going from April to July, but the RSI didn't go lower on that last low that we had just a couple of weeks ago. Moving on to another stock which has been in the wars and still keeps trying to bounce back, Eurasia Mining. Here we're back at that line from last September. That's around the 3.25 pence area. We'd like to really clear, as I've said before, 3.4, the magic number here. Above 3.4 would end the downtrend here and then possibly give us a rally up to 4.75 pence at a February resistance line, even if we then fall back away after that. Ideally, no fresh lows. We've had higher lows since May. On to another strange situation, grit. Here you can see that we've had we've got an uptrend line in the RSI window, but basically we've flatlined and then pushed higher. Want to see an end of day close above the 50-day moving average around 1.52 to then open up the possibility of the shares heading up towards a resistance line projection from back in March as high as 2.4 pence. So that could be a key thing if we break through the 50-day line on grit. Next up is a stock which had a great announcement today regarding the US, Graft Polymer. And here you can see we're in a broadening triangle base and gapped up higher today off the lows. So in fact, we've got one of our favorite setups, which is the bear trap gap reversal with bullish divergence accompanying it. That suggests that we should at least head back towards the 3.5, 4p area, which is the top of that broadening triangle over the next couple of weeks. But that unfilled gap to the upside and the bear trap from below the old support from the beginning of July looks interesting on that situation. On to Optibiotix, which has managed to blow all the targets out of the water in the recent past. We had 19 and then we had 32 pence as the next target, and we've managed to push through that yesterday. Next target, if you're still a believer in the turnaround story here, is up to as high as 53 pence by the end of next month. Unfilled gap to the upside to start the week. Very impressive, and that has worked as a continuation signal. So at this stage, only back below 32, really delaying the progress towards the low 50s on Optibiotix. On to another stock which is making a comeback, at least on the bulletin board here, as it's Plexus, and here a bounce off the bear trap, bounce off the rising 200-day moving average, a strong looking signal. We're in a rising trend channel from basically the spring of last year, top of the channel there, heading for 5.6 pence, and the view now is that we can break and keep above the 50-day moving average. We've already broken that resistance line there from March. If we can have a decent end of day close above the now rising 50-day line, we could get up to the 5.6 area as soon as the end of next month. On to another stock which is bouncing very hard, RTC. Here we're already bagged today. We're actually in a we're actually in a falling trend channel there from back in the early part of 2020. So the target there up to 51 pence over the next couple of weeks, hopefully. In terms of the stop loss, I think really the early one would be the top of that gap there around 34 pence on an end of day close basis. Obviously you could stretch it back to the floor of the gap at 28, but ideally we close above the top of that gap at 35 and push higher towards the 50s. Stock which had an update today is Saietta, and it was a decent one. Here we've gapped higher through the 50-day moving average off the floor of that rising trend channel from the turn of the year. Top of the channel there as high as 90 pence, maybe over the next couple of months, but probably the initial target, the 200-day moving average at 53. So that above the 50-day line at 41, looking for the 200-day line, which is basically near May resistance. Another bolt from the blue comes in the form of Simec, and here a vertical move off within this broadening triangle, which we've had in place for quite some time. And we need to see really an end-of-day close above the 200-day moving average at 1.25 pence to then give us the prospect of 1.9 pence at the top of that channel from the turn of that triangle, rather, from the turn of the year. Finishing off with the stock which is blasted into life as well, Wishbone Gold, unfilled gap to the upside today. And if you look at the whole sort of pattern here, we had the bear trap from below the May low yesterday, and then gapping higher today through up to the old February resistance area, and even hitting the 200-day moving average. Initial target here, 5.5 pence, which is the top of that triangle from back in March. And if you're a fan of the shares looking for greater glory, then up to 8 pence at that January resistance line, which actually, given the gap higher that we've had today, looks achievable maybe as soon as the end of next month. But a bonus here would be an end-of-day close above the 200-day line. That's it for me today. More updates tomorrow.